The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the February 12th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs, what I call the 9 rules of the universe. The universe says, if you don't move, I won't move. Or said another way, if you sow, you can reap. But, folks, you first must sow. Rule number 2, unless you change what you are, you will always have what you've got. Something to think about. Rule number 3, the way you do anything is the way you do everything. Number 4, leaders are readers. What was the last book you read, and when did you last read a book? It isn't what the books cost, folks. It's what it will cost if you don't read it. Rule number 5, don't say if I could, I would. Say if I can, I will. Rule number 6, wherever you are, be there. On your way to work this morning, concentrate on work, not on the way home. And then on the way home from work tonight, concentrate on the way home, not on the work out there. Rule number 7, don't set your goals too low. If you don't need much, you won't become much. Rule number 8, happiness. It's not something you postpone for the future. It's something you designed for the present. And rule number 9, time is our most valuable asset, yet we tend to waste it, kill it, and spend it rather than invest it. That's not you, folks. Thank you for investing your time with us here each day at TFNN.com. Those are the rules of the universe. Respect them, and they will respect you. Let's go check out the markets out here. Right now, Dow is trading up 22 points at 16,016. S&P up 4.5 points, trading out at 1824. Composite up 15 points, trading out at 4206. Russell 2000 getting in on the game out here. It is up 7 points. It's trading up 0.6%. Apple down $1.40. Microsoft up 33 cents. Google down $3 and change. Priceline jumping in on the move out here this morning. Priceline up $35, trading out at $12.47. Caesar Stone, SCSTE is a ticker symbol. That's up 12% here this morning. They were out with numbers, revenues of $96.8 million versus $76.2, and they had net income of $17 million versus $10, so a nice 12% move. Fossil Group, FOSL, up 5% this morning. TripAdvisor up 6.5%, up $5.50. Packaging Corp up a little over 6%, up $5. SPX Corp, SPW's its ticker symbol, up 4%. Owens Corning having a nice morning, up 12%, up $4.78. To the downside, it is amazing. Amazon, AMZN, down 2.5%, off $9, potentially getting ready to form a large A to B equals CD down. Andersons Inc., ANDE, down 8%. FireEye, FEYE, down 7%. Euronet Worldwide, EEFT, down 11%. Marketo Inc., MKTO, down 11%. Big loser this morning, Ventress Biosciences, VTUS, down 62%. That is a haircut out there. 877-927-6648. That's our phone number. Folks, give us a call. I am telling you, I am warning you, I cannot yell. Well, I could yell louder, but then you'd be turning the volume down, and I don't want you to do that out here. We've got signs of not just like a crack in the ice. We've got the kind of signs like maybe the ice is melting as it is in Sochi up in Russia out there. And that is the euro, Japanese yen. Now, what is going to be key here, we got the daily chart on my screen here of the euro, Japanese yen. It's made the 0.382 retracement. We've seen it make a topping pattern as we took a look at the 120-minute chart out there. We'll do that here. This has really got to be our area of focus because this is Stevie riding through the streets of TFNN, blazing, saying, folks, there are people out there that say you can't time the market. Those are the same people that I consider to be ancestors of folks that used to maybe watch Roger Bannister run. You know the story of Roger Bannister, don't you? He was the first guy to break the 4-minute mile. Now, those folks that say you can't time the market, those are the folks that also used to believe that you couldn't break a 4-minute mile out there. You know, it is the Olympics, it's the Winter Olympics, but down in the base village of Sochi, it could be like the Summer Olympics out there, right? Now, for thousands of years, literally thousands of years, people believed that you could not break the 4-minute mile. So how is it that Roger Bannister did it? The wind wasn't even at his back. Some of you might say, well, circumstances, it was the wind at his back. It wasn't. In fact, the day he broke the 4-minute mile, he considered not racing because of the wind conditions out there. But what Roger Bannister did, day in, day out, was finally he found that the real secret was to visualize that you could do it first. He played that race back and forth in his mind. He had tried so many times and had failed to break that 4-minute mile. But the real key was he believed. He believed in himself, and he saw it occur before it actually occurred out there. Now, here's the power of being able to vision that what you want in life, folks. It can't get any better than, quite frankly, the Roger Bannister story. Because since that time period, since Roger Bannister broke the 4-minute mile, thousands of people have broken it. In fact, I can't remember these. I used to know the number off the top of my head. I've got it written down somewhere. But it's something like within that first year after Roger Bannister breaking the 4-minute mile, there were another 20 or more people that were able to do that as well. So what happened? What happened out there? Well, look, folks, to me, it's the same thing with regard to folks that say that you can't time a market out there. If you find if you find trading patterns that'll do it, you can do it out there, because those folks that say that they can't, they're just simply not willing to do the work. They're not willing to envision what is out there. And I am telling you right now, just as Roger Bannister would, that you can do anything you want in life. And right now we've got some significant signs of a market that is topping. Has it reached that point here where it's given us the confirmation? No, it hasn't. It hasn't. But we might see that here today, and so we want to be paying attention to it, because we saw those cracks in the ice, and they were substantial, and they were this morning, and they were during the 5 a.m. to 7 a.m. It was actually quite, between 5, it was really, I think, between about 6 something and 7 a.m. out there when we saw the Euro Japanese yen. Let's go take a look at the 30-minute chart out here. Specifically, the Euro-Japanese yen cracked between 6:30 and 7 in the morning. Huge, wide-ranging bar to the downside after forming some significant patterns on the 120-minute chart out here. These are the patterns we took a look at yesterday with the shooting star, the reversal out there. Wide-ranging bar. We've got a descending price channel. That's a descending price channel that's been in place since December 27th out there. Yes, our markets moved higher, didn't they? Our markets moved higher into December 31st, while the Euro-Japanese yen was moving lower. So who won the battle? Who was it that was actually painting the picture of what was to come? Was it the markets, or was it the Euro-Japanese yen? Yeah. You know the answer to that, because we know what the results are. So why would it be any different this time? What we've seen here take place on the 120-minute chart, if we go from the swing point low, that coming in at 3 o'clock in the morning, that's on February 4th, all the way up to the high of the shooting star yesterday at 9 o'clock. What we've seen is a dead cat bounce, a 0.382 retracement. That's it. Now, if the highs get taken out, I'm good. I've got no problem changing my opinion about the market out here. But right now, what I have to do is I've got to tell you what the message of the markets is right here, right now, this very second. And all we're seeing is a bit of an oversold bounce out here inside of the Euro-Japanese yen on the 120-minute chart. Look at all of these other 0.786 or 618 Gartley sell patterns. You know what? What's interesting about each of those patterns out here, as you take a look at it on Tiger TV. Now, if you're listening on your radio, your mobile device at TFNN.mobi, thank you so much for doing that. Let me explain to you what they're actually doing, because all of the viewers on Tiger TV, they can see it. They didn't turn into, a Gartley buy or sell pattern. They have 5 outcomes out there. Dead cat bounce, 0.382. Well, we saw that already take place this morning. Your second one is the 0.618 retracement. Well, inside the Euro-Japanese yen, that'd be 137.77. Your third outcome is your 0.786 retracement. In this case here, 137.09. Your fourth outcome is going to be your 100% move of a move. That's getting back to the 136.23. Hey, if you take a look at those other Gartley sell patterns as price was hitting the top of the descending price channel, they all did what? Yes, They did that fifth outcome. They turned into an A to B equals CD down. That's why now it makes it easier to go take a look at the daily chart out here, because the daily chart says, you know what, the trend line, and we're just taking a look at a trend line versus the channel lines that we were looking at inside of the now the 120-minute chart's got different opens and closes out there. Inside of the trend line here, December 27th is when the high was made out at 145.67 out here. Your next touch point on the trend line, I'm just using the swing point from January 16th out there. That's at 142.89. Price this morning, as price was moving back, it was hitting also the trend line. That's where that's one of the other reasons why I stopped at that 0.382 level on that Gartley sell pattern out here. And here's what we're going to be watching, because the real signal will come. Can price get back inside that trend line? Can it resume its downtrend out there? What's that price? I would say if price closes today, if it gets anywhere below this morning's low at 7 o'clock, right around 138.66 out here, 7:30, whenever that actually came in, that's going to be your indication that an A to B equals CD down is going to form. And that will most likely take price down to the 131.71 level, which is going to take you all the way back to the November 7th time frame out here. And that'll be your indication that it wasn't Paul Revere riding through the streets of TFNN. It was your man Steve Rhodes who was sounding the horn out there. So if you're long and strong, just be careful. Go ahead and just make sure that you've got some stops in place. Go figure out where to place those stops. And if you're waiting to go short, I say wait a little longer. Just let the market prove itself to you. Because if this is the extent of the retracement, it's a doozy on the way down. And all we've got is right now is signals. All we've got is signals that the bears are coming as I ride through the streets here of TFNN.com. We just want to make sure when it is that they're going to arrive out here. Right now, the Dow is up 11 points. S&P is up 4. Let's go check in on the Russell 2000. Let's go see what it is doing out here in the marketplace, because that's the leader in the clubhouse. It's up 0.6%. It's trying to just simply stretch its muscles out here and catch up to what the rest of the markets were doing. Can the Russell 2000 do it? It's saying, hey, everything else has gotten up towards that 0.618. Would you just wait for me? You left me behind. Well, in this case here, that would say the Russell 2000 would try to make its way up to about the 1144 level. It's at 1135 here right now. Russell 2000 is a weak link. All the Russell 2000 really doing is getting back into that big upthrust day from January 30th, the low of which is 1130.35, the high of 1144 out there. We've got the NDX 100. Let's go check in on that. What's the NDX 100 done? You know, the NDX 100 signaling that we are in a consolidation, or that it is in a consolidation. Guess what it did here this morning? Did what it's supposed to do. Test the highs of the consolidation. Test the highs of that three drive to a bottom pattern. That was at 36, 34, 65. It's tested it, and it's rejected it. 877-927-6648. We'll be right back, folks.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 10 points. S&P is up 1. Russell 2000 up 5 points right now. Let's go check in on the ES Mini on the 120-minute chart out here, because as we were making a nice little up thrust, or the market was, during that 10 o'clock session, again, it's a 120-minute chart that we're looking at. This is the March contract for the ES Mini. We're seeing a nice little price relative strength divergent pattern here that has formed. We don't have a reversal candle here as of yet. This session here will end at 12 noon. But you get a close below 18.13. Let's see, where is the actual bearish engulfing candle? You had an open at 18.13. I'm sorry. Yeah, 18.13.50. So you get a close below 18.13.50, or right on 18.13.50. What will have formed is a bearish engulfing candle. You'd like to see the following 2-hour session. So I would say going into 2 o'clock, you'd like to see a lower close on that as well in order to confirm that pattern. And that then, combined with what you're looking at inside the Euro-Japanese yen, that would be your place to go ahead and put your trade and use stops. Use stops. Use stops out here, because the market can do whatever it wants to. Now, that's on the ES Mini. Let's go take a look at the strong hands inside of the marketplace. The strong hands have been the NASDAQ futures, the NQ out here. And guess what? It, too, forming a price relative strength divergent pattern out here. In order for it to form its bearish engulfing candle, you'd need to see a close below 36.15. You're at 36.22, so 36.15 by the time period of 12 noon today. If you see that, you will have gotten a reversal signal. Your confirmation will be a lower close 2 hours later, and that is in the NASDAQ futures. Let's go check out the Dow here. See what the Dow futures are doing. They probably also, so they have also formed a little price relative strength divergent pattern. The Dow in its futures contract, it needs to close below 15,929 out there. So 15,929 is the number, and then a lower close within the next 2 hours. Now, just out of curiosity, let me just put the Dow Jones industrials up on my screen out here. Give me a moment. So we're switching from the futures contract here. It just takes a few moments to load into the Dow. So here's the beauty of why, I say to you folks, you don't have to trade the futures. What I want you to do is I want you to get access to the futures charts because they're going to give you a whole lot more information. And a whole lot more information because you want to be able to fill in that void. If you just made your decisions based on the ETFs or based on these patterns here that I'm showing to you or that I'm sharing with you, they're not going to be present on the ETFs because it just doesn't have enough data. Sometimes they're present. Don't get me wrong out here. But in this case here, you wouldn't have the same signals out there that we're looking at. So this is just simply switching over the same 120-minute chart out here. But in this case here, this is of the Dow Jones, the cash index versus the futures market. Now, just for the heck of it, let me run over and take a look at the Russell 2000. Yeah, I didn't think that this was going to have it in place because it has been so weak. It has not had an opportunity to form a price relative strength divergent pattern out there inside of the marketplace. So back to the NDX 100 just to see what it has done here. The NDX 100 this morning getting up so far to an inter-session high of 36.35.92. That's a test of the swing point from January 22nd. That's where we had that 3 drive to a top pattern. Now, look, if you get it close today above 36, 34, 65, that would be very bullish because you're taking out one of the more bearish patterns out there. Of course, you want to be taking a look at volume as well. But if you do get it close above that, I've got to say, you know what? My hat's off to the bulls. They were able to pull it off out there, and their biggest concern is going to be the wind that they are headed into, that headwind, which is that Euro-Japanese yen. So they're going to need to get that thing moving higher out there because that is telling us a huge story. If we take a look at the other indexes out here, let's take a look at the S&P 500. Let's go see what it has done. The 0.618 retracement off of its high. The all-time high, January 15th out here at 1850.84, down to the low of February 5th out there. Remember, as the market was cratering, people were thinking, man, I missed the move on the way down. How could I get in on the move on the way down? Things are cratering. It's never going to stop. It's never going to stop. The sky is falling. The sky was falling on CNBC, on Bloomberg News, on Fox Business News, the whole kit and caboodle. Now, turn it on today. Is the sky falling or is it gotten very blue out there? It's gotten blue, but might be blue in the face out here because what we've done here in the S&P 500 is made the 0.618 retracement. 1826.68 would be the exact number. It only got up to 1826.55. Are you kidding me, folks? How is it that works? Now, of course, it closed above 1826.68. That says that the S&P 500 would go ahead and move higher, but it has done the 0.618 retracement off of the low, and that's where you would set up and could set up an A to B equals C, D down. If we take a look at the Dow out here, losing strength, has not been able to make that same 0.618 retracement, but bravo, it did make it up to a high so far of 16.036 versus 16.069. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 23. S&P is down 55 cents. Now, for all of you that have been tuning into the show here, thanks so much for doing that. You know that for really the last 4, 5, 6 days out here, I've been sounding a message. I've been asking you in your long-term accounts. I don't do this very often because the patterns don't set up that often out here. And what I've asked you to do for your long-term accounts is I asked you to make calls, get in touch with your system administrator to find out what it is that you needed to do to go ahead and pull a trigger to go to cash, because most of you really can't go short the market. Cash is an investment out here. And what I asked you to do was I asked you to forego maybe about 20, 30 points or so in the market, because there's enough danger signs out there, and I would love nothing more than to know that I am happy to have you give up 25 points and sell near the top, near the potential top, and give up those 25 points than the number of points that you could potentially lose to the downside out here. Now, when I was talking about that, the markets were at their lows, and we were talking about the market making a bounce. Take a look at today's action. We've gotten up inside the S&P 500 to the 1826 level. The actual all-time high out here is at 1850. So we're really only talking about 24, 25 points out there in the marketplace. Now, many of you, if you were to put in a sell order today, it's going to be based on today's close or what have you. That's really not what is so important out here. But it has made that move with regard to, I would rather there are enough significant bearish signs in the marketplace where, forego those 25 points if, in fact, you are tied to the S&P 500, or even whether it's the Dow, whatever the index it is that you've chosen out there. Now is a good time, in my opinion, to go ahead and execute that trade. So from a long-term standpoint, now, That's the best. That's absolute best advice that I could give to you. If the market is going to bust out from here, you're going to see it move above that 1850 level out here. But if you want to have that feeling, if you want to say, hey, you sold out or you covered yourself up at the highs, it doesn't really get any better than this, other than trying to sell the top tick, and that's. You're wasting a lot of time trying to do that here. So with regard to not being able to call the markets, I say BS. It's all before Steve. It's all before Steve out there. And to forego 25 points in a market that's at $1,800, come on. What's the real big deal out there? It's not that big of a deal. Even if I'm wrong, it's going to be so easy for you to get back in, and we're going to see these reversal patterns that are out there actually get taken out. And so not that big of a deal out there. So I do urge you and suggest that if you haven't taken that action, then right now, right here, today, is in fact the time to go ahead and take that action. Get in touch with your system administrator now and find out what would be needed in order for you to go short. You can wait for some other signals. I gave you signals with regard to on the 120-minute chart what we would be looking for. Those certainly haven't played out at this moment here, but you don't really have the time to be making that type of trading decision. So that 25 points, we're now in that range here right now. So don't worry about if it's a few bucks higher or not out there. So that's the advice. That's a free advice from Steve-O, but it will come with a cost in anguish if I turn out to be right out here. And it's really not me. I'm just laying out for you what it is that I see in the marketplace and knowing with regard to the way that that there are signs out here, absolute warning signs out here inside of the market. If we take a look here, let's go finish off the indexes. We didn't take a look at the Dow. I think we made it to the Russell. Well, the Russell 2000 here, you can see, still weak, has not even made the 0.618 retracement, unlike its brothers and sisters out there. Of course, the NDX has made the 100% move, getting back up to the consolidation high out there. In the case of the Russell, the 0.618 retracement would be 1144. A valiant attempt here this morning, as it has been the leader to the upside, up five? Where is it? The Russell. It's up about 5 points. If you are saying, "Hey, Steve, I don't believe you. I don't know whether I should go, close out my long-term account today." The beauty about the long-term account, you're not paying any taxes out there, so it's such a easy trading decision. And I got to go back and say, what were you thinking? Back on February 5th. And what were you thinking back on February 3rd? Were you worried then? Were you wondering, oh, my goodness? And now what the market did was gave you a big, huge gift by making a normal retracement back out there. So that's the cool thing about the markets. Now, with regard to the if that's still not enough, I can say, okay, so let me give you something that is enough. And what is enough is that if you were to see, for example, today, more than 2,188 net declining issues on the New York Stock Exchange, and you might say, hey, where do I find out that information? You know what? You can just go to the. I don't think it's that easy to actually find on the NYSE site. You can go to Yahoo as an example. Their numbers are not going to be as exact as the numbers that I take a look at out here. And right now you don't have it. You got 843 net advancing issues, not declining issues. But if you were to see a reversal like that, 2188, that gets your McClellan summation index back below zero. And I'm not worried about trying to time. I'm not trying to worry about timing this, whether it's today or it's tomorrow or it's Friday or it's Monday. And what I'm trying to say is that from your long-term trading accounts, it's the 25 points is what I was most interested in, is you being able to get back to that level and be able to protect your longer-term nest egg out there and say, I'm going to go ahead and ride this one out. I'm going to let the market prove itself to me either to the upside or to the downside out here. That's really what it is I want you to be able to wrap your head around, and that's really the opportunity that you've got out here. So the Russell 2000, that is a weak link out here in the marketplace, just as the Dow is. Let's go take a look at the ETF structures out here inside the Qs. The Qs, just like the NDX, testing the high. Now, in the case of the Qs, they're now trading down below. Now, the Qs are going to be different than the NDX because you've got you're accounting for dividends and so forth. But in the case of the Qs, getting above the January 22nd swing point high, $89 even, Steven. Only 30 million shares up there, but it was moving into yesterday with 38 million shares. Stop 3 pennies below it. If this market is really going to bust out, I would have expected actually it to gap up this morning. The Qs, because it stopped 3 pennies before the swing point. It did not do that. So far today, volume-wise, 13 million shares to the upside. again testing 29 million shares. So pretty good volume as it moves into that swing point out there. But watch the cues, see where they trade into. If we take a look at the IWM having the most price juice in it this morning. Really all the IWM is doing is getting above the downdraft here on February 3rd. That had 92 million shares to the downside. Came into it yesterday with 44 million shares. Oh, really? And then today so far, 13 million shares, again, taking on 91 million shares. We've been trading for an hour and 10 minutes. Do the straight line math on that. It's not going to be able to bust above that with volume here today. So that's on the IWM. The 0.618 retracement in this would be about 113.51 if it could find some legs and find some energy here today. But I'm thinking, probably not a likely outcome. In the case of the SPYs hitting the 0.786 retracement, 182.54 out here at so far intraday high, 182.83. Volume-wise, 29 million shares, really going into the downdraft of 208 million shares, which was January 24th. Yesterday's high moved higher on less than, 50% of volume, 117 million versus 208. So I don't know, 40-some-odd percent lighter, less volume on the way up out there. That is on the SPYs. In the case of the diamonds, just to see what they are doing here. Again, not being able to make the exact 0.618, but you know what, folks, close enough out here. The 160.78 would be the number. Yesterday, the diamonds moving up with 7 million shares. Not too bad, not too shabby, but it was going against 14 million shares, so half of the volume. Compared to that January 24th downdraft date out there. And that's what's going on inside of the ETF. So if we take a look at the other price movers out here, silver is the one we want to be able to keep our eye on. If we take a look at silver out here, it's trading up right now about 0.8%, trading out at 20.33. Let me switch over, take a look at the silver contract. So it's going to take on that consolidation high out here. So it's very close to it, 20.47, 20.50, 20, it's really, that's the range. Maybe if I use the lower part of it, it would probably be about 20.44. And so far today, what it has hit is 20.39 out here. So right in this range here, maybe today is when we see whether or not silver can break out. And if it does, it's a $2.30, $2.50 measured move out there. That says that you're looking at about $22 or so would be the move in silver. Now, if you take a look at just retracements off of the swing point high to low out here, you'll see the 0.618 retracement is 21.42 and $22, 22.15 is your 0.786 retracement. That's coming off on the daily chart from the October 30th high, and that's a setup inside silver. I suspect that is where it would actually head to if it can bust through this consolidation. In the case of gold right now, up about $3 and change, just kind of taking a little bit of a rest as it moves up to the 13.11 area, as it's 1-to-1 A to B equals CD, but more likely 13.61 to 1 to 1.618, as well as a test of the October 2013 swing points out there. So that's what's going on inside of gold. Let's take a look at light sweet crude out here. Light sweet crude going ahead and trying to now make a move up to about the 104 area. It's trading at 101.15. As long as it closes today above 100.75, that is its swing point from December 27th. It's got the volume to it's above that swing point with volume out there. And whether it would be volume or not, a close above 100.75 says it wants to make a run to at least 103.64. I would say 104.42 becomes your 0.618 retracement level. And as well, you would see light sweet crude get up into the overbought territory, overbought condition. Let's go see what's happening in bonds here right now. Bonds having made the dead cat bounce, 0.382 retracement off of the lows here from December 31st up to the high that was put in as it ran right into dead smack into resistance, and that was the bottom of the longer-term consolidation. That was on February the 3rd, and that low 133.14. In order for bonds to move higher, they're going to have to get back into the rising price channel that they have broken through here this morning. Take a look at natural gas, see what natural gas is doing here at the moment. Looks like natural gas may actually be trying to set up an A to B equals CD down. What would that A to B equals CD down actually look like out here? It would actually take natural gas down to probably about the 350 area, take you all the way back to the area in November where it had broken out from. Those are November 5th swing point low right around $3.46 out there. Has not made the A to B equals CD pattern, but it is a pattern that we should be paying attention to and looking at. Right now, the Dow's off 30 points. S&P is down 19 cents right now. NASDAQ Composite is up 8 points. Let's go take a look at some stocks here, moving and grooving. Amazon looks like it's picking up a little bit of steam now to the downside. We looked at that during the first hour of the show. Let's go take a look at it. It's got a swing point that it can easily manage now from a volume standpoint out here. I got to get to the right chart out here, though. It makes it a little bit easier if we look at the right tab out here. So Amazon, give me a moment to pull that up onto my screen out here. Amazon now trading. Now let's take a look at the volume. So we've been trading for, an hour and 15 minutes. It's got volume of 2.4 million shares moving into, and it's already tagged the swing point. It's only got 4.4 million shares. That's from February 5th. So it's moving into that swing point. That says, which is February 5th, says it's going to test the low. 337.73, which is held as resistance. So this is one of those situations where the third time good could be the charm. That's support level number 1. Support level number 2 happens to be the bottom of the breakout session or the top of the breakout session from October 24th, and that's at 332.65. And it had broken out with volume of 12 million shares, and it could easily do 12 million shares today if it maintains this volume level out here, and that is in Amazon. And if it does do that, and it breaks the first level of, I'll call support level 2, then probably 275 or so is what is in the cards for Amazon. So Amazon beginning to crack. Let's go take a look here at IBM, see what it is doing here right now this morning. IBM is up just a tad. It's trading out at 180.47. What is it doing? It's testing its downdraft here from January 22nd. That came down with 13 million shares. You moved up into it with 4 million shares yesterday. Oh, I remember I had a request to go take a look at Lorillard. LO is the ticker symbol. They are the makers of tobacco products out here. Let me see where I put that. And I apologize. I told someone in the den I would take a look at it during the, of course, I haven't really misstated that. I just planned on looking at it earlier for that individual. I think I have that in the tab that says show up here. Let's see, because Steve-O needed to show up in order to be able to show that. Here we go. So we're taking a look at Lorillard. They are a manufacturer of tobacco products as well as electronic cigarettes, brand names like Newport, Kent, True, Maverick, and Old Gold out here. Now, as we take a look at this, this chart here looks pretty good as we speak right now. You can see this is a weekly chart that we're looking at, by the way. Nice rising price channel out here that it's going to get down and test. Here's the problem, though. If you take a look at this, I'll explode this up a bit. Much like the markets last week, this actually made a little hammer candle. And that hammer candle low from last week is 47.46. You're at 47.18 right now. On a weekly chart, it's breaking the hammer low. You know the saying, the expression, if you close below a hammer, if you're long, you're wrong out here. Well, that's what Lorillard is telling us. That's what it's communicating to us, and says that it's really going to perhaps break this rising price channel and get back to this swing point from August 23rd out here. That is not looking good. That high is 43.57, low of 41.56. That's August 23rd. Looks to me like that's where it is headed to. 877-927-6648. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is down 25 points. S&P is flat out here. Composite up 8. The Russell 2000 giving back, not much of its gains. A third of its gains here this morning, at least, up about 4 points. Let's go out to Atlanta to Gunner. Gunner, thanks for calling. Thanks for holding. How are you this morning?
How you doing, Steve?
I'm doing great. Now, you guys getting snow up there? I think I saw something about Augusta's getting some ice storms or something up there. So you must be getting some snow and ice as well.
Well, we're 2 hours north of Atlanta, so we're actually just getting snow.
Oh, you're getting snow.
Yeah, Atlanta's got plenty of ice.
Yeah. Hey, we don't have much time, so I wanted to. You wanted to take a look at Royal Gold, RGLD. Tell me what you're doing, how I can best help you.
Well, to tell you the truth, I'm looking, because it's so overbought, I was thinking about shorting it for a short-term trade.
Ooh, no. You want to short something that, if you're going to short something, my best advice would be to short something that's weak, not something that is strong out here.
That's why I called you.
Yeah. Look, to always go long something that is, unless you've got something that really is coming on the bottom and you've seen a sign of strength or a test of a swing point on light volume, you want to go short something that would be weak. Yeah. That would be like the Russell 2000 would be an example. I'd rather see you go short the Russell 2000 than a stock like a Royal Gold out here. It's on a weekly basis. it's coming into a swing point from August 30th. That only had 4.9 million shares. That was on a weekly basis. That's what's called a key reversal session out here. Bearish Engulfing says that 67.25, may be resistance. But it had 4.9 million shares, and last week you traded into it with 6.8 million shares. And this week you already have 3 million shares. It's going to go test that high, and it may blow it away at 57.50. You're thinking of playing it short. I like your thinking from the standpoint of looking to buy a retracement, but not from actually going ahead and playing it short. I would say the best performing market this year in 2014 has been the miners.
Right.
So I would be looking for places to enter the miners versus going ahead and trying to take it short. And that's my best advice to you there. Are you long on any gold or silver stocks? You are, okay. Okay. Yeah, for me, in my newsletter, we're up like 80%, another we're up 30%, and the decision-making that we're going through is these look like really good long-term trades. We actually even widened our stop on one this morning, and I'm looking, because I'm watching it approach these swing points with volume out here, and it just says that, it wants higher price eventually. Maybe there's a bit of a pullback, but I'm looking at those pullbacks as places to enter. So the answer is, in one sense, I'd like to see a pullback. Not that I want to necessarily give back gains, but I'm thinking more longer term on this. So, that's my mental thought process right now. So I hope that helps you.
Sure.
Anything else that I can look at for you here while we got 45 seconds?
No, that's pretty good. I mean, I know it's a strong stock and everything. I was just going for a real short-term pullback.
Yeah. Well, in this case here, Royal Gold specifically, it's absolutely, this is my Rhodes Momentum Indicator out here, and it's got all these little red boxes along the way. It tells you that buyers are in control of this. You haven't seen any selling in this. Not even really. I mean, buyers are in control. So please don't short Royal Gold.
Well, don't worry.
Okay? Hey, thanks so much for calling, Gunnar. Stay warm up there and have a nice week. Folks, stay tuned. Basil Chapman is up next, and it is Wonderful Wednesday. That means we got Larry Pesavento, Daryl Martin, David White, and the Tom O'Brien Show from 4 to 6. Be careful out there in trading. We've got some signals that say be very, very, very careful. Have a great day, folks. Look forward to seeing you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.